every 15 minutes, day and night. There is a coin flip on the price of Bitcoin. Millions of contracts trade on it. And here's the thing nobody tells you. There is real edge in this game. Smart money is winning it right now. I pulled 80 million trades to find out who, and whether you could be one of them. What I found is stranger than the house always wins. Let me show you. It is called KXBTC15M. Start price, end price, both 1 minute averages. No referee, no disputes. Just math every quarter hour. And here is the first surprise. Over this stretch, Bitcoin crashed 17%. The coin barely noticed, 49 up, 51 down. Basically a fair flip. One that a lot of people are taking. Recent rounds trade 1 to 3 million contracts each. Watch one round, July 22nd, 4:30 in the afternoon, $3.03. That is the entire margin that settled it. Out of a $65,000 Bitcoin, 0.03%, and riding on it, 2.25 million contracts. Run Kalshi's published fee schedule against that tape, and the estimated take on this one round is about $26,500. One round, 15 minutes. Now stretch that across every round. Kalshi publishes its fee formula. The public API hands you every trade. Multiply one by the other and watch the line. An estimated $78 million in 69 days. Off this one product, call it 1.13 million a day, and it is climbing fast. At July's pace, this single market is on track for something near $500 million a year. Estimates from the public schedule and the public tape. The methods in the description. First question, is the price honest or is it rigged? Take every market's price at the halfway mark and check how often that side actually won. The dots sit right on the diagonal. A 70-cent contract wins 70% of the time. The price is dead honest. But stop and think about that. An honest price on a coin flip is a strange thing to find in the wild. Somebody had to make it honest. That is the first clue about who is really in this market. So we hunted for edge the way a real trader would, split the tape by who is aggressive and who is patient. The takers hitting the button versus the makers quietly quoting, and the takers win. Before fees, they made about 0.4 per contract, $300,000 in our sample, taken straight off the people quoting against them. On a fast Bitcoin market, the aggressive side is the informed side. They see the coin move and they hit the stale quote before it updates. That is real edge, real skill. And then the fee lands, and takers pay it at 4 times the maker's rate. That 0.4% edge becomes a 0.6% loss. The one group that is actually right still loses, not because they're wrong, because the toll is bigger than the edge. So follow the money. The makers do earn the spread. That is why they show up. But they're also the ones getting picked off, and they pay a fee of their own net. They end up down about 0.2%. The takers, the group with the real edge, down about the same. 2 different jobs, both done well, both losing. The house never picks a side at all. It takes 1.3 cents off every contract either of them trades. It was never the smart money against the dumb money. It is the table against everyone sitting at it. Which answers the strangest thing here. If it is a losing game, why do millions of contracts trade? Because nobody at this table is stupid. The takers have a real edge and can feel it working. They just pay it all back in fees. The makers earn the spread. The arbs keep it honest and get paid for it. Everyone has a reason to be here. The house just sized its cut to beat all of them at once. So here is the real answer, and it is better than you can't win. The edge is real. It is just smaller than the rake. The prices are honest because sharper players than you already made them honest. And the house doesn't need you to be dumb. It just needs you to keep playing a game where the toll is bigger than the best edge in it. That is not a coin flip you beat. It is a beautifully engineered toll booth. The data's linked below. Run it yourself, then tell me what you do. See you on the next one.